Good evening, everybody, and welcome to another edition of Live Market Analysis. A couple of technical difficulties, of course, everybody on the recording date doesn't know about that, but it will explain why we won't be able to do US stocks and a few of the other trading view related items today. So just a heads up on that one. Look, there'll be plenty of interesting stuff, no doubt, after we talk about the disclaimer which says that everything we're going to talk about is general in nature, has not taken into account financial circumstances, objectives, or particular needs. So before acting upon any of that stuff, please consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Of course, trading, investing is a risky business. You will endure losses at some time. You need to get used to it. Apart from that, ultimately, it's you who's responsible for the stuff you do and not me. Let us get on to the nitty-gritty of today's presentation, which is where you get to ask me about any of the stocks, commodities, bonds, indices, crypto, foreign exchange that you're interested in, and I'll give you my best technical analysis. Reader, hopefully we'll learn a couple of things along the way, or it could be a case study, a stock you're really interested in. It might have been a week ago, a month ago, it might have been a trade you did a year ago, but you just want to know maybe how you could have played it better, or it could be anything else to do with your trading methodology, your money management, or your mindset as well. Without further ado, let us head over, not there, that one doesn't work, over to here to the AMI broker screen, and we'll do our customary rip around the grounds. And we are full risk position on the Nasdaq composite, so that's our determines our US market exposure. Full risk position means you're able to, if you feel that way, to invest all your capital that you apply ordinarily apply to the US. You might say, well, I'm not so sure about that, Carl, because stocks are looking a bit expensive. Well, that's up to you, but you're certainly allowed to. Why are we allowed to? Well, very simple. Short-term trend is up. Very clear. Light green ribbon. Long-term trend is up. Dark green ribbon. Both of those ribbons are behaving as zones of dynamic demand. So you can see, particularly the short-term trend ribbon here, the price is trampolining off that zone. That's what we call dynamic demand because it's demand that moves, obviously. Then we have areas of static demand, like, for example, that point there, which has a low of 2750, ended up, by pure coincidence, sort of helping stamp out that low there. Yes, it slipped it a little bit, but you can see no point of demand or supply is finite. There's always a little bit of sponginess. And then we have obviously points of supply up here, but we generally seeing rising points of demand and rising points of supply. That's the important bit. So rising peaks and troughs is another way to put it. And whenever you have rising troughs, that means you're seeing accumulation in the system. You're seeing demand reinforcement on those pullbacks. There's more demand. There has to be more demand. That's why you've got rising troughs, and also supply removal. It's the only way it can be when you have higher troughs. It's because you're removing supply from the system. So these are all healthy demand side control characteristics. And then we have a predominance of white candles. That's our final flourish, which is pretty simple. More whites, more downward pointing shadows than blacks, or upward pointing shadows. You could argue that certainly a candle like that and a candle like that are a little bit disturbing. Hey, they're very disturbing. But as it turns out, they haven't meant a whole lot, and we're awaiting next signals. Could be either of those two to tell us that we need to be concerned. In the absence of all of those things by default, then we are full risk position. Bottom line is, all we can see here is demand side control, and that's a good thing. Heading over to the ASX 200, it looks even better, I put to you, because I think we have a clearer predominance of demand side candles here, more whites relative to blacks. Full whites as well, so very few upward pointing shadows, and it's just all chugging along very, very well indeed on the golden Le Creuset, of course, which is what I've nicknamed the Aussie market. I used to call it the old tin pot because, let's face it was a bit of a tin pot. We only have a few resources, a few banks, and some Wesfarmers and Telstra, but it is not behaving like a tin pot anymore. It's behaving like a golden Le Creuset, and it looks absolutely brilliant, and therefore full risk position. Now let us do a whip around the grounds. Actually, we'll start over here with Russell and see if there's any reason that we wouldn't want to be full risk position, because it is a bit of a narrow focus. The Nasdaq in the US, very, very risk on market. That's why we use it, and obviously the ASX 200 is the obvious benchmark here. Russell 2000, this is another risk on US index. It's 200 of America's biggest, most influential small cap companies. Does that make any sense? Big small caps. And we call this the heart of corporate America. So if something really bad is going on with the US economy, we'll see this struggle. And it's not struggling. It actually had a really solid week last week. You can see there. Those would have to be the candles on Tuesday and Wednesday, and only a very shallow pullback on Thursday and Friday. I still think we're looking pretty much intact there. So that's not going to push me off our full risk position stance. Neither is that in the French market. That's starting to recover. The rest of the European markets, I'm guessing, are probably going to look pretty much the same there on the DAX. The Euro Stocks 50 is fine. The FTSE is actually looking very, very good, apart from maybe that Friday candle. That is a little bit disturbing if I saw that on the ASX 200, but still overall trends are intact, and the Spanish market is exemplary. Heading over to Asia now, we're seeing a very strong performance there on the Hang Seng, the Nikkei 225. We've seen this when we see this commensurate risk-taking, risk-seeking behaviour around the world, because you don't get any more risk on than equities. Oh, wait a minute, Carl, my stocks are safe. My stocks, I'll hold them. You have to tear them out of my cold dead hands, mate, because they're really safe. No. Let me tell you, all stocks are risky. They're a big ball of risk, and that's the way professional fund managers treat them. So when we have really, really strong risk-seeking ability, we get this coordinated movement in stock indices and vice versa, and looking very, very good on both of those Chinese markets. And you might have seen a post I made over the weekend, because I tuned in Saturday morning and I had a look at the daily chart. It looked like a pretty big level coming up, and then I looked at the weekly chart, and that confirmed it for me, taking out these highs from October 2021. I thought, okay, well, let's go back to the monthly chart, and I was quite surprised to see we're actually now, if we close out August around these levels, we're going to be on our highest close for the Shanghai Composite in over 10 years, and that's pretty interesting for me. And this is no commentary on the Chinese economy, because the Chinese economy, for all appearances, for all intents and purposes, doesn't seem to be doing that well. And in theory, then again, here's the funny bit: a country's stock market is supposed to be a reflection of the economy, or how the economy's going. So there is a little bit of a disconnect there, and I'm putting it down to just liquidity factors, as in there's just a bunch of money that needs to find assets to sit in. And the property market isn't a great place to speculate and punt in. And we know, and I don't want to offend any Chinese people, but probably many Chinese people would agree that Chinese people love a bit of a punt, don't they? And nothing gets people just in general now more excited than rising stock prices, and that just drags in more and more money, which is liquidity. And the more they go up, the more they go up. So I did tweet something about this, potentially a giant wall of liquidity about to come to the fore here, and that will have an impact on commodities, and I think local commodity stocks as well. Some of that will flow through here. So very interesting developments potentially not far away from us, and possibly explaining why maybe the golden le creuset is thus. Having a look within the Aussie market here to target potentially sectors for you, we're looking at a daily chart, just making sure, of the discretionary sector, which looks absolutely magic there, doesn't it? That's a very, very strong chart. The energy sector, I think, still looks very much intact. It's a nice turnaround setup, and we should always be looking for a mix of setups, and therefore that is interesting in itself. The financials sector has started to, what's the right word, solidify, strengthen, rebound potentially from some short-term doldrums, and is actually looking quite firm now. Actually, I think that looks quite good. Gold actually looking pretty good. So we're looking okay here for the Aussie market. Healthcare's better than it was. Maybe a bit of a dodgy candle there at the end, but that's probably today's candle, so that won't matter. Yeah, that's just today's candle, so that doesn't matter. Otherwise, it's fine. Technology is fine. That's the other one there. Materials are still looking very good. I know that last candle doesn't look bad, but these are obviously just today's candles. I thought I was on a weekly chart. That doesn't matter because resources, property, all looking good. Staples looking good. Utilities looking good. When has that happened? Can somebody just chime in? As long as you've been listening to me, and for some people it might be 5 minutes, for some people it might literally be 5 years. When has that happened? When have we had all ASX 200 major sectors actually looking, let's say, better than half decent? I want to know if you've ever seen it. I can't remember in recent history. Of course, I've seen it before. I've been looking at markets for a long time. But what does that mean? What does that mean? remember what I said about coordinated risk-taking. I think that's pretty good. Now, I have to drop the caveat here, because as I always do at this stage, what's the caveat I drop here, everybody? I don't know the future, do I? I can't tell you what's going to happen next. It could be literally at the top right now, and I wouldn't have a bloody clue because it's not in the charts yet. But what we can see is demand-side control and broadening demand-side control at that. If this concept I have here that we're seeing broadening risk-taking, surely it's got to be based upon economic fundamentals and macroeconomic fundamentals, everybody. Surely it's got to be based on a strengthening global economy, and that would imply that commodities prices are starting to turn up. So that's where this next group of charts becomes important. Aluminium, what do you reckon? Is that showing us incredible global growth to justify those stock prices? Not really. Copper, no, I wouldn't say that one is. We'll look at iron ore in a second. Nickel, no, definitely not there. Lead, no, let's go no on that one. Tin's not bad, but it's not that great either. And zinc is not great, but not bad. So yes, maybe we're seeing a little bit of detachment from economic fundamentals. Does that bother you? It doesn't bother me, okay? And I'm being quite serious about that. It doesn't bother me at all because, prices are going to do what prices are going to do. And if there's a trend there, I'm a very, very happy camper. There's certainly a new trend developing here on lithium carbonate. We'll leave the line chart there for a second because we can see that classic turnaround setup in place where we test the long-term downtrend ribbon. Doesn't work, does it? It's so used to being repelled from there. It came down one more time. I think that's when I landed from my holiday. It came back down and then it realised, no, we are going back up. And it blasted straight through. Look, ideally, I see this little trough play out a bit higher up in the ribbon. It hasn't happened this time, but I think the price action, when we go back to the candles, suggests that we cannot any longer, and some of you I know have already gone there, but even the most ardent skeptic here cannot any longer argue that this is still a bear market. A couple of weeks ago, I said it wasn't a bear market anymore, but I was reluctant to call the bull until I saw the price action I wanted to see. And it's frustrating how things turn out sometimes. If this had made a trough up here, I would have been all over the place, spruiking this new bull. But that correction was more severe than I would have liked. Hey, it still landed at the dynamic demand of the short-term uptrend ribbon. Hooray for the short-term uptrend ribbon. And that was encouraging, so was that. I think by then I started to say, I'm happy to go there. I just give me a dink. Give me any sort of dink. And I think this is the dink. And this is how hard this thing wants to be for me. It refused to even give me that clear dink, isn't it? The lower low and the lower high to give me the bona fide trough. It refusing to do that for me. But I do feel, and you all know my policy on the intraday dink, that between this candle and this candle here, I think we've had it. And then that's the day there. I think you can confirm the new bull market is in place. And today really only goes further to confirm that. I have had some questions on Twitter about that. I'll put those words in, the verbal of that into some words on screen tomorrow in tomorrow's evening wrap if I have time. And the other markets there, if we join the dots here back to lines, we can see that lithium carbonate spot prices are also back above their long-term trend ribbons. How about that? I can't say long-term downtrend ribbon for any of these lithium minerals prices that I track, because lithium hydroxide was the final shoe to drop, and that is now also back above that long-term trend ribbon because it has neutralised, and Australian spodumene has gone ballistic. And if you saw that coming, well, kudos to you, but I don't think you did in your wildest dreams see that coming. And I bet you didn't pick the actual reasons why it occurred, which started with anti-involution and then got twisted with a bit of a speculative, and we talked about that yield bubble building there in China, and a few mine closures. It just was a perfect storm, and none of you predicted it, I bet you. Let's go to, well, we're going to have to do gold here, aren't we? Because we can't do gold in trading views. So, but that's okay. Look, we don't have the live candle, but that doesn't matter either. We know that gold is roughly stuck in the middle, and I don't see any need to be bullish or bearish, just neutral until we move above either that high or that low there. And silver, hey, it's going to be the same, isn't it? Because we know gold is stuck in the middle. Silver's becoming a bit stuck in the middle, isn't it? And ditto on what I just said, but gold is really stuck in the middle. There we go, that's better. And let's just pick a high, which is that one. that one there. And I wouldn't wait until the close beneath there to say that this trend has turned. I think somewhere beneath that one is going to be problematic for gold. And by the time you're starting to interact with the long-term trend ribbon, it might well be too late. But I'm not going to call which way it's going to go, because that would be silly. I think the jury is very, very much out. None of those things work, so forget those. Dare I try it one more time to see if a miracle has occurred, and I'm doing it. I know it won't happen, but see, that just takes me back to Amy Broker, and when I click on the Chrome one, it does nothing at all. So with that in mind, let's stay on Amy Broker. And go to your requests. And I'm going to start with your offline requests. And first up, let's go here. I want to catch up with Justin's request from last week. Now, a bit of a community service announcement here. Justin sent me his request at 6:56 p.m. Perth time, whatever time it is for him, but 4 minutes before we start. Now, there's no way, because normally I'm troubleshooting some technical issue, that I'm going to see your requests that come in that close to start time. I'm probably not going to see them if you send them to me any later than, say, 6:30 my time. Okay, so try to get them in a little earlier, preferably before 6 o'clock my time, 8 o'clock Eastern time. Otherwise, you might have to wait an extra week, like Justin, to see analysis on the first one, which is Elders, which is actually a really interesting chart. Disappointing today. I wish I hadn't seen that last candle there. I wish it didn't exist, because I would have been able to, talk about this turnaround setup here, which was starting to flourish. And much like that lithium chart is interesting. I mean, Elders, what has Elders got to do with lithium? Not very much. But the price action changes in a very similar way. And you could argue, hey, Carl, that was the day to buy it. Very good for you. There's a higher major trough in there. I think I would agree with that. And certainly, if you're a bit more conservative like me, you might say that, that's where it's starting to look good again. I agree with you. In fact, I would say that this is really the decisive candle for me, the one that breaks above that long-term trend ribbon, which on that day is only just turned amber. And for me, that might have been the day I ran it. I think in the scans. Because that for me is the first day you can participate in this using my model. I would argue that's an aggressive setup, because we haven't yet seen the dink that we want to see at that stage, but we have eliminated the long-term downtrend ribbon as an upside target, because we have this. Well, I have this rule of wanting to make at least 1-to-1 on my trades at the outset of that trade, because otherwise, why would you do the trade if you don't stand to make as much as you stand to lose? So beneath the ribbon, it makes it very hard to do. And if you could imagine, say, this candle here, let's just zoom in, you can see with very little upside into that ribbon, there's not much you can do if you're, say, putting a stop loss down here. So if you're getting in here, you've got that much risk and maybe only that much reward. So not going to work for us. Let me get rid of some of these studies. And the difference is here. So if we're getting in on this day here, and we measure out reward to risk, well, we're still probably, now for me, I would want to see the price you could tell me if you can imagine a scenario where I'm going to continue to hold a full risk position beneath the bottom of that huge white candle, which has occurred on massive volume, telling me there's massive supply removal, huge demand coming to the market. So this is about setting logical areas for your first exit, okay? And we're using that first exit as a proxy for our risk, okay? We might not be able to get all out there, okay? It might be not until a candle here, or a candle here, and a candle, that's a pretty dodgy one. Let's just try that one again, that one there, and then maybe, it might be, it might be down here that we finally get our final third out. But it also, think about this, and this is why this idea works. It might also be up here somewhere. You know what I'm saying? So this is why we don't have to be so rigid about these things, but we want to have a point of reference. We need to have something unequivocal that we could all see and we could all agree on to help us decide what our downside risk might be at the outset of this trade. So let me do this again, because I love to draw my arrows. But obviously, if somewhere down there, and the other thing I love is the confluence of factors. So if we're closing back down there, we're closing back beneath the long-term trend ribbon as well, aren't we? That would be a major issue. So not just beneath this massive demand side candle. And you've got to think about it. If we get back beneath that candle, all that demand that was there, where is it? It's been consumed by the supply in the market. If this is our entry, we now have a point of reference. Okay, that's our risk. Now, if we look up, we don't have that big bloody downtrend ribbon in our way. Doesn't mean we don't have other stuff in our way. And now it's our job to go back and look at these things, look at these factors. So I think there's this. This is potentially a factor here. That's an old point of supply, quite a significant point of supply. And it may well, we don't know until we get there, it may well act as a future point of supply. And for me, it would actually make it difficult to take this trade. Certainly, it qualifies as a setup. That's why I would have put it in. Turnaround setup, aggressive setup. Aggressive setup because we're now through that trend ribbon. But that's where I stop in those scans. It's your job to get to the end of the scans with the handful of stocks that you like, and then to go through this process of reward to risk. I can't do that. I don't have enough time to go and do that every night for you. So I rely on you, you rely on yourself to do it. And probably we're going to find that this trade might not have been taken. As good as that white candle is on that volume, it's a ripper, but maybe there were other big white candles on that day with great volume, with everything else checking out the turnaround setup. We have short-term uptrends widening, the ribbon's widening, it's strengthening, it's steepening. We're back to higher peaks and higher troughs. At that candle, no doubt there's a predominance of demand-side candles. So we're checking all those boxes that we have for a continuation setup, for a continuation turnaround, for a turnaround. We're checking all those boxes, but where the aggressive thing comes into it is, well, can we make it work beneath that long-term uptrend ribbon? And if we can't, we need to wait till we get above it. It really is that simple. And then if we do, we need to make sure we've still got enough in it. And that's probably where this one falls down. I know that's a bit of a long-winded look back, isn't it, at history. It doesn't help us today, but it hopefully helps you understand some of the things that you might want to consider when you're looking at these turnaround setups or aggressive setups, as it were in this case. Now, it's actually really interesting to track this through, because if this is our area that we're a bit worried about, that's the order of magnitude. We're a bit worried about that area, okay? We would ideally love to have one reward to risk there. Okay, well, what about this candle? Look at this candle now. Let's check it out now. How does our reward to risk work out? Well, now we've got a little trough here because we did get a high and a high line that day, sets that as a trough. So this is our point of demand. Okay, so we can set our hypothetical, isn't it? It's a hypothetical or a soft stop. Soft stop is not actually typed into your broking platform. That's why it's a soft stop. It's in your head and in your head alone. And when the price gets to your soft stop level, you then have to make a decision. And what I tell beginner traders is you're probably better off using a hard stop. Hard stop is in the broking platform, because you're not going to second guess a hard stop. Right? And you're going to find a lot of times at a hard stop, you're going to get taken out of the market, and there'll be a long downward pointing shadow that just snuck you out at your stop loss and then went straight back up again. And for us with soft stops, we're fine. Because we know that points of demand are spongy, right? So we don't want to have that stop in the system. We want to see the price action at the point of demand. We're not hard and fast. We're common sense, remember. But I do tell beginner traders that you're probably better off with a hard stop, because I don't trust you to enact the soft stop. Because a soft stop, you've got to go and make that call. If it's gone straight through with a big black candle and you've lost more than you thought you were going to lose, then you have to be able to make that call. And that requires experience, and that requires some discipline, which tends to come with time in the market. So that's kind of how I just decide whether it's a soft stop or a hard stop. And I think you, listening to me speaking for the last 5 minutes, probably understand where you should sit in that spectrum. If you're a soft stop like me, that's the area we're looking at. And if we're getting in here, hey, don't worry, everybody. There'll be a point to this. The point is coming up very, very soon. I promise you. Stick with me. Okay, here we are. We're doing all of the first of the offline requests today. Don't worry, we'll catch up on everybody. So that's our entry now. Okay, that's our entry. Here's the point. The point's coming. So if this is our downside, now can we make one-to-one into that reward to risk level? And it's tight. It's tight. And remember, this is a common sense system. Okay, it's not a hard and fast system. So I'd be more inclined to say that this candle here is kind of that first setup where this trade not only meets all of our criteria, because it was already meeting all our criteria, but it now meets that critical minimum of 1-to-1. Because by the time it gets to here, we're at 1-to-1 reward to risk, and maybe there's a candle. There isn't in this case, but maybe there's a nice little lower shadow, or maybe there's a point of demand that's formed that's a bit closer to break even, and that allows us to move that soft stop up. Okay, that's why I'm okay with just 1-to-1. Who knows where we can go from there? Okay, anyway, it's very subtle, but it does help you, I think, compare and contrast setups on each day, because we get so many setups, don't we? So I think this day here, was I pointing to that day there, is probably the first bona fide 1/3 that you can actually act upon. How did it travel from there? Look, it was all white candles. That was very, very satisfactory. We get to here, which we make a nice little point of demand, and then we kind of get to here, and we think about, we've taken that out, haven't we? And actually that old supply zone actually did act as supply. Shadow, black candle. There was supply there. And that's why we respect these levels for our reward to risk. We get to this candle here though, and this is the magic candle, because it now sets this as our last point of demand, which we want to start to remove risk at. Okay, we've also got this other peak here as well. So this is a nice little sort of confluence, and you'll see this happen often, very often, where that last trough is happening at or above that second from last peak, and actually we're getting a nice little duo here, and it just makes the setup even stronger, doesn't it, when we see that? So certainly beneath there, we're thinking -1/3, and we're probably thinking -2/3 beneath here. Maybe we might be going a little bit more. Okay, let me just move that down a little bit, which gets us to the current price. Found a bit of supply, and down she goes. I don't know, it could have been maybe it reported setting sale. I wouldn't have a bloody clue, nor do I care. It's unfortunate, it's annoying, but that's the extent of our interaction with this. Oh, that's annoying. What do I do? Okay, well, is today enough in itself for me to manage my risk tomorrow? Below average volume, down the bottom here, below average volume, above average volatility, on below average volume. What does that mean? Well, there was definitely some supply in the market today, and none of the demand side really didn't want to get in the way of that, which is a bit disturbing in itself. Like, why wasn't the demand side fighting harder to maintain the price level here, which it had done so well up to that point? So that is a little bit disturbing. But at the same time, we probably haven't removed a lot of demand from the system. So all that means for me is there wasn't much volume, which means we didn't interact with a lot of demand. So we know there was lots of latent demand in the past. In theory, it should still be there. We haven't interacted with it yet, and that's why we would say this candle is one we definitely want some confirmation on. If we saw that big black candle, that's a nasty price pattern. If we put these three, 1, 2, 3 together, that is a nasty little reversal, isn't it? There's a bit of volume in that one, but that's not the day. That's not the key day, this one here. So if we had saw a significantly above average, even just above average, this actually would take on more weight for us and will require less confirmation. I think this one needs a bit more confirmation. I know it might be famous last words, but I need to see the interaction with this zone. And we might end up seeing it turn out like this. And if it does, you know what? Again, it's annoyance, isn't it? That's the order of magnitude of our interaction and participation with this, because at the end of the day, these are just pixels on a chart. Oh, but Carl, I couldn't afford to lose it. No, you have to disassociate yourself from what's happening in your broking account. Turn that off. Don't have that on when you're doing your analysis. Have it as far away as possible, okay? Even if it means printing out the charts so you can unplug and go offline and do this analysis old school, like I used to do when I started out hand drawing charts. So do this analysis. And if you saw that candle, it's very simple now. They're not pixels on a chart now, they're printed out, aren't they? But you know what to do. And for me, that would be, I don't know, what would it be for you if you saw a candle like that? I think we're talking ZRP sort of stuff, aren't we? So this one didn't work out, but it's all of about break even. Who cares? And we go on and we move on to the next one, because I don't know if you've noticed, we're kind of in a bull market here, and there's lots of really good charts out there. So that's order of magnitude where I would be, but it would be more interesting if we saw something potentially like this, which, you know, where I'm going, or where I'm going next, is, say, a nice demand side candle and it's entirely possible, you know, a lower shadow pointing down there. I know that candle won't make sense in a second. Won't make sense now, but it will in a second. Something like that, for example. So if we saw that, and that's where our soft stop comes into its own, doesn't it? Because it's showing us that, yes, that level did act as an area of demand. It took a little while for it to kick in, but the demand did find their legs and push in there, causing that long downward pointing shadow. And we're still in demand side control, and therefore there's nothing to do. You know, I might now start to say, well, clearly this is the level. You might say, Carl, you're going backwards. Yeah, I know, but that's really now my point of no return. We really can't get below there anymore. I can get rid of all the squiggles on the screen, because that's it, right? But we will know what to do when we see the candle, okay? Which is, I can pretty much say that for every chart we're about to look at tonight. What do we do? Oh, I think I've explained. I was going to say, I kind of get to the end of the chart, and I feel I need to come to a conclusion for Justin, and I think I have, haven't I? We need confirmation. We'll know in the next candle. Even if the next candle's a bit indeterminate, we know those levels that we don't want to cross anyway. I think that's a pretty decent little case study to kick us off. I think we covered a few interesting little bits and bobs in there. Let's move a little bit faster now through the rest of the list, because I won't do the candle by candle how it played out. But we can say New Hope Corporation, literally, you know, New Hope here for a potential uptrend. Again, frustrating, disappointing, and it does exhibit how and why these are a higher risk than your boring old continuation setups. You know, for example, like Hub is one. I hopefully didn't do anything. There you go. It's just boring, isn't it? It's boring, doesn't do a whole lot, but doesn't stress you out either. But then we get to something like New Hope, which is very much still trying to turn around. It's still grappling with the fact that it had a prolonged period where people were bailing out of this thing. They thought this thing was going to be cactus. And then, you know, markets turn around, don't they? Nothing lasts forever. And we know probably by about here we're starting to look at it. I'm pretty sure I ran it on that day, and that day. Today's okay. Look, we got a nice lower shadow. It's happening at a place we would expect it to happen. A little bit of that second from last peak going on. A lot of probably the short-term uptrend and the long-term uptrend ribbon coming in. But if we have to set a point of no return, I think it's there. Maybe a little bit there, but let's face it, if it's closing beneath that long-term trend ribbon, this one hasn't worked out. And we know the problems it had. It had problems for a long period of time. And who's to say that those problems are completely and utterly behind us? So that's what I'd be looking for in summary. I wouldn't want to see it close beneath there, but today's candle's encouraging, and hopefully we see this move up, and then you can probably start to even move your soft stop up to there. Let's go to, and Justin's asked for pretty much all the coal stocks, and actually that one looks better. And if you're not in coal stocks, you think you want to get involved on the next turn up, on the next really nice candle, I'd say Whitehaven looks better than New Hope. So in terms of they're going up at the same time roughly, but Whitehaven potentially going up faster and in a more cleaner fashion than New Hope. And when they pull back, Whitehaven pullbacks less. So, you know, which one would you rather have? And then we go to SMR, which is probably the third on that list, because it hasn't even got through its long-term uptrend ribbon yet, which is still causing it some issues. And somebody did ask me about this, I think, in last week's presentation. I said, hey, it's the laggard. I mean, look, it's meeting the criteria in and of itself, in isolation. It doesn't look terrible, but it's the laggard. Are you comfortable voting for the laggard? NWH, well, that one looks substantially better than all of those. And that would be my pick. Not that it's necessarily a coal stock, but I'm guessing if Justin's asked for it in the same vein, then and that's not a pun vein, but it probably is doing some contracting for one or all of those companies. But it is, you know, mining services obviously related. And let's go zoom normal, because it's important to look at that. But this is so much better, isn't it? It's a boring turnaround setup, and that's hard to get. I like boring turnaround setups, so that is definitely my pick of them. Plus 1/3 FRP for me on that one. is very easy to say. FRP indeed. Okay, that is all of your stuff done, Justin. I'm going to do Mick. Mick definitely got in on time today. He's got CXO, and I'd probably put this in the category of Sayona and CXO. And look, some people think that I've got something against lithium stocks because, well, I started calling them down probably about here. I mean, go check the tapes. When I say tapes, there's tapes on Ausbiz, there's tapes on Think Markets. Here, obviously, somebody's quoted me saying, calling them quote unquote, pieces of crap or something like that. I said at the time, in a bit of a heated moment, and they just assumed that I was anti-lithium stocks. I'm not anti-lithium stocks. I'm just a trend follower, and you also would have noticed that some of these are starting to appear in my uptrend scan list now, and I don't care. I really couldn't care less. It's just following the trend. And my point is that some of you may never thought that I would come to say this, but I think core lithium is plus 1/3 FRP if you've got it. So how about this? Carl saying, hey, if you've got core lithium, hang on to it. If you don't have it and you're that way inclined, this can be considered for adding some risk to because it is a turnaround setup. It's meeting all the criteria. I can't find a criteria in my turnaround setup that it doesn't meet anymore. So therefore, it will go in tonight's list. I haven't done tonight's list, by the way, because I've had a bunch of other things I've had to do before tonight's webinar. So I will be up late getting that ready for you for tomorrow. And you'll see core lithium in there, Mick. And you're also going to see Sayona Mining, because I can't not put that in any longer as well, because it really has done everything that I require from a turnaround setup, putting aside the fact, of course, that it's Sayona Mining, right? But there you go. There's the dig to the top of the long-term trend ribbon. And a few of the other ones are already in there, I want to say. I'm pretty sure this one's already gone in. So that's Piedmont Lithium. You can see the dig at the top of the long-term trend ribbon. Carl, you're buying it at 14.5. You should have bought it at 8 cents. Oh, well, maybe I should have. I don't know. And PMT, which I think has gone in as well. Don't quote me, but there's a few of them. I don't think it's featured yet, but I think it's gone in. And Pilbara Minerals has actually featured a couple of times there. And obviously Mineral Resources was actually the first one to go in. And we've talked about this in previous weeks. It went in, I think, on that day there. And they're all still looking pretty good. So no complaints on any of them. And, yep, that's it. And continue to call those just like we would any other charts. They're just pixels on the screen. Hopefully that answers your question on that one. Mick, actually, you've got a couple more before we go. B4P, I think we're okay. Obviously, this is the big... I wouldn't say that's our entry candle necessarily, but you might have had it before that. But that shadow probably just keeping us out on that day and just waiting for us to have a nice little dink in there, which kind of didn't really dink. A couple of sort of single candle moves there, but today's the closest thing to it. But maybe it's a bit far down. And look, today is decent, above average volume, definitely a good candle coming in at that previous point of supply, which is now coming as demand. But I'm not sure if I want to have a crack at this particular candle, just given the severity of that pullback from 240 to 170, in percentage terms, it's quite large. I'm definitely interested, but just not yet. I think what I want to see is this famous word again, but just any sort of little dink again, just to confirm that this demand side control is coming back in. Okay, so we're seeing demand side control come back in, but let me just see confirmation of that, and then I'm prepared to have a crack at it. Coming back in. We should still have plenty of reward to risk at that stage. So I don't mind it. If you've got it, happy to hold it, but just needing a little bit more to add risk to it. Droneshield, Mick is asking for minus a third on this one. I'm going to say yes. I think a few people out there are quietly nodding their heads at the screen. And if this was the first time we saw this, I think we would have let it go. But given this, and now it's been confirmed by this, followed through by this, I'm not sure we can let it go this time. I'm also mindful, though, that we're not far away from that. So if you are a little bit more conservative, or you're happy to give it a bit more room, there's an obvious point of demand there. Close beneath that point of demand, I could not possibly continue to run with a full risk position. on this trade. I think there's enough evidence to go at tomorrow's open, whatever that might be. Okay. Ideally, you did it already. Ideally, you saw that candle at 10 to 4 when you did your analysis on just your open positions, and you said, you know what, I'm just going to knock a third of this afternoon. I'm not going to wait for tomorrow's open. I'm just going to knock a third of this afternoon, and we'll go minus a third here, and then we'll see how we trade tomorrow. Okay, but if you haven't done that, then tomorrow's open's fine. Alternatively, if you're a bit more conservative, you might want to wait for a close below. And what I'm going to say here is just minus a third again, because it's additive, right? So if we've done a third there, we'll add another third there. If you haven't done a third here, you might want to consider doing 2/3 there. But I also still think that in brackets, we need to say, even after all of this, we're going to keep some risk intact, okay? And it might be plus 1/3, but I don't think at this stage, certainly not on that candle, but even on a close beneath that point of demand, that we want to be all out just yet, because the overall trend is just awesome. And I'm happy to give that last little third a bit of room to see if it does something like this. And then I can add back in maybe a little bit down the track. Okay, thank you for Mick and Justin's offline requests. Going to move to online requests now. I'll make sure that... Thanks, Andrew, for letting me know that the technology is working. And all I'm doing here is just looking for red flags in terms of technology, but I think we're okay. Andrew's suggesting I use Firefox instead of Chrome. I did try and reboot. That's why I started late, by the way, because I did reboot everything. But you're right. I'm going to try different browsers during the week. Don't worry, I'll get it to work. We'll be back next week and it'll just be working, and none of us will know why it stopped. Okay, I don't think there's any big problems in there. So let's go to first in best dress, which is Francine asking, what do you think of RHC? Which actually, on this candle here, 2 candles ago, what would that be? That'd be Thursday's candle. I actually thought it looks decent enough to add some risk on. So let me keep that arrow there and go plus 1/3 on that day. And it's a bit of a cheeky one because it's a bit flat. That's the only thing. But it's a turnaround setup, and like I said, I'd like to have a bit of a mix of setups. Today it looks like it's balked a little bit at $40. Not that $40 is a big round number in this case. It's not. We've been there many times, but there can still be a few people who, potentially got in at 32. What are they making? 20% profit, and they take a little bit of profit there because for no other reason it's 40. I don't think today's candle is so sinister that if we did take on some risk at that Thursday's candle, that we need to do anything just yet. But we would be mindful of where our points of demand are, and clearly a close beneath here means that third comes out, and we take our loss and we get on with it and probably say, what were you thinking? Ramsay Healthcare, what were you thinking? Because it was this was one of the best downtrends probably of the last 2 years, isn't it? But that's what interests me also, how some of these things can just recover like their downtrends never happen. So what that means for now's FRP, I guess if you've already got it, we're not looking to add risk on the basis of that last candle. We could look to add risk if we saw any sort of dink and nice white candles coming up. Let's cross that bridge when we get there, and we've got an eye on where we would start to reduce that risk as well. Let's go to the next request, which is from Adonis. We've got US stocks there. I'm not sure I'm going to be able to do those, Adonis, unfortunately. And your other ones there as well. So we might have to take a rain check until next week on those. We can do Iluka, this one here for Neil. Welcome, Neil. And I think it looks very good. And it's been looking good, I think, since... when did I run it first? I'm pretty sure I ran it there. I think that was my first day back from holiday, if I'm not mistaken. 31st to the 7th, maybe second or third day back. But Yeah, I just like that little dink. We see that a lot, don't we, in these sessions? That little dink back to the long-term, short-term trend ribbon. Threw in a really decent candle. Look at the volume as well. So that supply that was working in the system, the supply that really probably was a legacy supply from here, it really got taken out, it really got consumed. And then the next 3 days, or 2 days there, and 3 days, showed us that the supply is completely ineffectual and it's really a demand-side controlled market now. And heading back up. So pretty happy with that. Let's don't need all these arrows on the screen, but we can say, if you've got it, FRP, that goes without saying, and if you don't have it, I'm happy to consider it for adding risk, depending on what else we see today, and if it's the one that warrants it the most. And I'd say it's going to be pretty close. It's going to run really close to warranting it the most, but we haven't seen them all yet, and I haven't done the scan, so let's just leave it at that. Let's go to Avant. Avant's got AEF, which is also moving along pretty well. We need to zoom in a little bit and move that. Last time we looked at it, we probably said something like, as we obviously have 5 candles. So one, that's Monday, Friday, Thursday, Wednesday, Tuesday. So we had that candle there, was the last one we looked at. And we said full risk position, plus 1/3, pretty happy with that. And then look at what we got next. Not great, not great. I don't think either of these candles in and of themselves are reasons to do anything. They've barely pulled back within, even that candle's range. Certainly down here we've got issues. That's the big point of demand. And maybe you could argue that's an important level as well. You could probably drop it beneath those candles. But we haven't really interacted with it. And if anything, we've demonstrated that it appears to be, along with an area that we know is more than likely going to do the job for us, act as dynamic demand in terms of the short-term uptrend ribbon. And with that shadow, and that candle, I think we're A-OK here. And therefore, really all I need to do with everything else intact, just go FRP and plus 1/3. So I think actually today's giving you a chance to add risk on the basis of that candle. Let's go to your next one, the SHL, which is another interesting setup. We talked about the pain trade last week, didn't we? The pain trade, which was BHP, is a bit of a pain trade. And a few people had a bit of a chuckle over that because they kind of relate to certain stocks that they've traded that may have even gone up and made money for them, but were just a major pain in the ass in the process. And I think Sonic Healthcare is very much in that pain trade category. And by that I mean it's starting to meet the criteria again for a turnaround setup. I even ran it on this day here as a long uptrend scan list. I can assure you I would not have run it as a feature chart because it's Sonic Healthcare and it's a pain trade. But it's meeting the criteria. I think you need to be wary of, say, a zone up here, which could cause you some pain. It may spend a little bit of time there. So I'd probably question this one on reward to risk basis. But look, it's meeting all the criteria. Dare I say, even with those last few candles, this little dink here back to the short-term trend ribbon's doing its job. That's a very strong candle. But there's not a lot of conviction here, though, is there? And that's what we're seeing through this whole process. So when you see a chart that's really gone nowhere for 12 months, like this one, that should ring some alarm bells for you. When you see a chart that it looks like a zebra, right? It looks like a herd of zebras running across your screen. So black, white, black, white, black, white, black, white, black, white. That's not consensus, right? That's indecision. And when you see lots of overlapping price action, V's, A's, V's, A's, V's, A's, these should be red flags for you. Okay, so it's a yes on the basis that it's meeting the criteria, but where does it rank? Where does it rank among the other ones that you're going to find in a rampaging bull market? Okay, so I think going wrong, I think it'll go up. Well, it's more than likely than not to go up, but how much pain will you endure while it does? Hopefully that makes sense. Because for some people, go, Carl, I don't get it. Like, do you like it or not? It's meeting the criteria, but personally, I'm quite confident I'll find better setups than this. Then why would you put it in? Well, because it's meeting the criteria, right? And that's the process. It's just part of the process. You find all the stocks that meet the criteria, and then you narrow down that list. TSO is also meeting the criteria. It's not that one, it's that one. Actually looks decent. This is another one that's the herd of zebras running across the screen. If anything, it's more blacks and whites. I think it'll go up. I should say that's not. I shouldn't say I think it'll go up. That's silly. I think there's a higher probability it'll go up than it will go down or sideways because it's meeting all my criteria. But it will be a bit of a pain trade because generally this means there's a lot of paper out there. Okay, there's a lot of stock that's been issued over the years. I also think we're going to have a little bit of time spent perhaps over there. We're not too far away in terms of reward risk, but if you've got it, and that's why I've run it in the list. Certainly FRP, I think you could even consider it to add risk if it's the best trade on the day that you can find. What is good about this is that we're starting to see some interest come in here. Okay, so it all starts with interest, doesn't it? Can't go up if nobody knows about it. Have a look at WBT. Now we're talking about pain trade, so this was another pain trade that we talked about. And I ran it on this day here I think I even ran it as a feature chart, didn't I? Because I couldn't resist. I couldn't resist that candle. And we might have said something last week like 2/3 risk position, so taking a third off the table just as a precautionary measure and keeping 2/3, and that's why the model is never all in and all out until it is. I know that's a silly thing to say, but it tries not to be all out until you just have to be all out. Happy with this one. There's no reason to doubt it. I think, given the last two candles, if you're on it, happy to stick with it. You can add risk. So we go back to FRP now, from potentially not running a full risk position to certainly yes running a full risk position, adding risk if you're that way inclined. And you cannot argue with that and that and that and that and that and that, for that matter. In terms of reward to risk, that's the level up there, and it could be quite a big zone, but let's just put it roughly up there. I'm not going to get too pedantic about it, but that is a big candle up there. So we will not get to that point without some what's the right word? some interaction with that zone. Yes, okay, I think I've answered that. Let's go to Ian. It's got GNC, which is also starting to look good as well. Definitely another one of those turnaround setups. Potentially maybe a little bit more into that Sonic Healthcare category with those alternating candles historically. We're talking about whether the leopard can change its spots. I know we talk about leopards. I know we talk about zebras. That level's important. I think potentially also you could find a little bit of collateral damage around here because it was a significant area previously. And if we take that off and sort of draw that there, it was a pretty significant historical zone of demand. And let's change the colour of that. So it was a zone of demand, now potentially acting as a point of supply. Bottom line is, and I've said this a few times tonight, everything checks out. FRP if you've got it, full risk position, happy to hold it. That's good news. Plus 130 if you don't. I think you can add risk on this one because we are. Oh, I was going to draw a little peak and trough in there, but I don't think we are. But you definitely got a little bit of an intraday dink in there. So to keep things simple, let's call that predominance white candle. Certainly in recent times, short-term uptrend does seem to be strengthening and supporting the price action. Long-term uptrend ribbon is also supporting the price action, and that's the key to it, isn't it, for these turnaround setups? And we have taken out a bit of a pointed supply here as well. So no reason not to think about adding risk on this. I would just be cautious about some of those levels up there. It doesn't mean we're going to hit this level and then crash at all, but we're just wary of it. And it'll help us distinguish between two setups that have the same setup criteria but different reward to risk criteria. That's why we bring that extra layer into it. Okay, going to MTS, which doesn't seem to have many of those problems. I'm going to almost say any of those problems. Let's go weekly chart. I can't say any of the problems, but when's that? It's 2022. That's a long time ago. So I'm not too fussed about it, but yeah, it'll just play on the mind a little bit. But having said that, look, we're miles and miles away from that. These two are pretty insignificant. They didn't mean a whole lot. That's the dominant one there. So on that basis, yeah, I can't see any reason not to be full risk position on this. And I can't see any reason not to continue to add risk to it. I think it looks very, very strong. Dare I say, the strongest chart. The greatest exhibition here of demand side control we've seen tonight. FCL might pip that one because that's also looking very, very good. It hit a bit of a round number there at 3. I was going to say I don't think we've been there before, but we have, so then scratch that. 3 is not that important. Just pulling back. In fact, today probably showing a bit of demand kicking in at 3 now, that the old point of supply is acting as a point of demand, which is always a good sign. That's what that shadow is telling us. A little bit of a dink back to the old point of supply, and up we go again. So nothing in there is telling me that I need to do anything but continue to hold all the risk. Plus 1/3, yes, but let us be sure that we've got the next demand side candle in place first. Okay, so that candle there is okay, but let's see something that's better than okay. Let's see a nice white body, downward pointing shadow, or combination of. Let's go to John. John's got VYS. How are we going for time? Oh, we will stop all new requests. So I know Jackie with FEX is the last one. And back here to VYS for John. It is John, and looking very good actually, isn't it? Vysarn. Let's go zoom normal. That's always important. It's a picture of demand side control. Very happy with that one. A little bit sketchy, but look, more and more it's starting to actually be able to move again, and that's very encouraging. FRP plus 1/3. I'm happy with this one. Very, very happy with this one. I like it. Very strong demand side control showing there. Let's go to PXA, which is also in that category, and I think this is obviously the big kicker here. This candle here, and I would have run it on that day. I'm pretty sure I would have run on that day and probably ran it as a feature on that day. And you can see, you can see why. Obviously, a lot of people go, you can't buy it on that day. It's gone up too much. But it's just biding its time. We do create latent supply on days like this from people that just go, oh, I've got to sell it. It's gone up too much. I've got to sell it. I've got to sell it. And it takes the market a little bit of time to get through those people, right? And then all that's left is demand. Like you work through them. And then you see volume drop off actually because there's just no supply left. And then demand is more able to push, well, not able to, demand doesn't want to push price high, but it's forced to push price higher to get stock out. And that's what we're seeing now. It's not a clean slate completely, but going back a fair ways, nothing really all that sinister in close proximity, and therefore FRP. Today's candle's not enough really, I think, to add risk on, but certainly if you do see anything that even closely resembles next demand side candle, then happy to go for more risk on this one if you're looking for it. Let's go to Robert's got SDI, which is, it's trying to do a little bit of a turn there. So it's more an aggressive setup because we haven't had that neutralization of that long-term trend yet. I'm going to say no for me. I'm going to say just with the sketchiness of this chart, there's really no volume confirmation yet. So look at all of this. We're just not seeing enough days of above average volume to say that there's interest in this one. And these little ones, they live and die by interest. And if there's no interest, they're going to die. So no, I'm not personally me. I can very easily, quickly say not for me. It would need to start to do something like that. The trend would have to change. We'd need to see this come up a little bit. And more important than any of those things, we need to see some response here. Okay, so it's a no for me. If you like it for whatever reason, well, that's your business. It is, if I squint, an aggressive setup, and then I am squinting very, very hard indeed. But let's see. Like I said, volume is probably going to make or break that one. Let's go to Hayden. Let's look at the lithiums tonight. I did look at. I'm pretty sure I did all of those. So happy with full risk positions on those. I don't think we need to change any in terms of adding risk. Next demand side candles, I think, on a lot of these. IGO, let me delete those. I think also falls into that category. So they are in the scan list now. I'm trying to after tonight, obviously with CXO and SYA, I don't think there's going to be any substantial ones that aren't in the list, which is mind-blowing in itself. Maybe Argosy isn't in the list, but I would have happily added some risk on this day here, but it would have been an aggressive setup. I don't run aggressive setups in the watch list for obvious reasons. So I think we're okay on lithium. If there's some other ones, let me know, of course. WA1. This was the placement, wasn't it? Yeah, so you can pretty much guarantee with any ASX listed mining stock that if it's going up, your greatest risk is not, sellers or bad news. Your greatest risk is the company management going to, holding their cap out and begging for more money and doing it at a big discount to get it over the line. And that's what happened here. So, yeah, I don't know. You just have to trade what you see, and what you see is a big gap down. There's a big black candle there that you can't see because of that gap. There's somewhat of a lower shadow, but today's response kind of confirms the supply side is going to be lingering here for a while. For me, I would just prefer to be zero risk position out of sheer frustration and annoyance when it happens. It does happen. Or at the most, probably 1/3 risk position, and that's the last line of defence there. But they can just take a lot of time here. Look, the other way to say it is, I still think you can have some risk in the game. Dare I say, I still think you need to have some risk in the game, but not a full risk position just on the basis that it's going to stuff around for long enough that it's going to annoy the crap out of you when you're watching your money stuck in this while everything else is going up. That's all. And that shit's going to happen, isn't it? Because when your mining stocks go up, your greatest risk is company management. I'm sure many people here can relate to that disappointment. His announcement, he's got a trading halt, your thing's rocketing up the screen. It's the best stock everybody's talking about in the chat rooms. It goes into a trading halt. You go, this is going to be great news. And you go, actually, shit, no. $100 says this is a placement. This is a capital raise. Yep. We all had that feeling. Let's go to Droneshield, which we talked about already. So that's fine. With Palm EOS. I think you can. What do we think about this? $6? How round is that number? What do we think? Thumbs up, thumbs down. Thumbs up is no, full risk position. Hang in there, Carl. Thumbs down, knock 1/3 off. Precautionary measure. Ian's gone thumbs down. I saw a few thumbs up. Oh, we're a little bit split on this. I think we're about 50-50. Well, I think I'm going to say we just saw a few more thumbs down. I'm going to go thumbs down. I'm going to go knocking 1/3. And that's all we're talking about here. Order of magnitude. I don't like this candle. But in of itself, it's not enough to do anything about. $6, is it a round number? No, $5 is. Like, I'd worry about $5. I'm not too worried about $6. Who's kneeling down beside their bed at night? Please God, if you just let EOS go to $6, I promise I'll get out and I'll donate half of it to charity. No, nobody's doing that at $6, right? So, but it's there, it's happened. And when we combine it with that and that, I think we can just knock 1/3 and say, you know what, good trade, knock 1/3, and I can always get back in that third. And I've still got 2/3 risk position left on this one. That's how I feel anyway. Like I said, it's not a hard and fast black and white system, it's a common sense system. It's a feeling right about your decision. It's feeling comfortable with your level of risk decision. Let's go MPW, which is the most frustrating stock on the ASX for me. This one's from Robert, and I haven't been able to run this one. Now, obviously, here, and maybe I need to make an exception. Maybe I just need to make an exception because it started to get my attention around here with all of these white candles, okay? And then it changed trend, and it started coming up in my scans, but I couldn't do anything because of this. But this is a function of this. And that's not the company that it is now. I don't know the history of this, but I do know when I see that, I think backdoor listing. I think they have put a different company, because this thing never existed. They've changed the ticket code for sure from whatever this piece of crap was, and they've put this bloody good thing in it. But I'm left with a chart, and I'm a technical analyst, so I haven't been able to do much with it. Now you could say that because we've changed this, we're interacting, it's an aggressive setup, but it's gone from like 50 cents to $3 in a straight line. So what I can say with absolute confidence is FRP. That goes without saying. I probably should still say plus 1/3 because there's no reason not to. But it is, don't forget, because of the trend ribbon, still more of an aggressive setup. But that trend ribbon is a quirk. It's not real, but it's all I can see, right? It's there. So each week, I hope that somebody doesn't ask me about this one, and I've gotten away with it until now, Robert. Let's go LDR, because it's like the elephant in the room. It just keeps going up, and I haven't put it in. Probably people are wondering, hey, Carl, why haven't you put that in? That's why. LDR, there we go. Lode Resources. I'm going to say no. This one's a bit of a pass for me. It's a bit ho-hum. Let's give it a score out of 10, and it's probably a 5. With today's candle, it's a 5. Before today, it was probably 4.5, and today's candle has got it back to a 5. I'm not into taking 5 out of 10s. I do think it looks half decent, quite literally, as in there's a bit going for it. But let's see. For me, let's see. Sort of this. And then I'm going to be more interested. Yeah, we've got some above average volume coming today, but it's just one day, isn't it, really? So there's so much more that needs to happen on that. I'm a pass, but at least there's now a path to owning it. So you can say FRP, whereas maybe a couple of days ago, FRP would not have been on the cards. Let's go to SRL, which is substantially better. 10 out of 10 now because of today's candle. And I can't fault this one. I think it's brilliant. So this will go in tonight's, tonight's watch list for you guys, tomorrow's scan list for everybody else. FRP plus 1/3. People say, I can't buy that now, Carl, it's gone up too much. And I say, I don't know where it's going to end. So if you don't know where it's going to end, if you can't see the future, you can't tell me where it's going to end. So how can you possibly tell me it's gone up too much? Like, you can only say it's gone up too much if you know where the top is. But you don't. So you can't say that. The only thing you could argue is proximity to $2 as a round number. Did it spend time at 1? It did. I'm going to say I'll worry about $2 when we get there. So I'm happy with that one. And it's just a mindset. It's a paradigm shift. Either you can get on board or you can't. And that's okay. If you can't get on board, that's cool too. Do what you're comfortable with, but don't ignore these. Come back to these and say, look, I wasn't comfortable doing it, but I need to force myself to track it so I can tell myself whether that was the right decision or the wrong decision. And you might find that you convince yourself otherwise. You might say, look, I've got all the proof in the world that I need to buy these things now. Okay, at least we're bringing it to your attention. Let's go to Sue, who's got SRL. Well, there you go. Great minds think alike, Robert and Sue. And SEK for adding a third. I was going to say this is a bit like Sonic Healthcare pain trade, Sue, but it actually looks better, doesn't it? It's a bit cleaner. Yeah, it's a little bit of a zebra, but no, it's cleaner, and the recent candles are very clean. You can see there, we must have talked about it recently because we've got a big supply zone up there. But the strength of the recent candles and the price action, I'm happy to back this one. I'm pretty sure I did run it here as a regular setup, but I think it's getting close to feature chart status up here, pretty close. A little bit of this action here might just keep it out, but it's very, very good. Don't get me wrong, and I'm more than happy on this one. Go FRP plus 1/3 if you're looking for risk. Definitely needs to be considered. Kaili Resources, yeah, well, I saw it today because I have to write about it because I do a scan at the end of the day, and I say, what moved the most. So I don't know what happened there. If somebody knows, you can let me know, and you can also let Amber Jane know. But they were queried by the ASX because when your stock goes, let's look at the range in the day, when your stock goes from 4 cents to $3.18, okay, on not an insignificant number, 1.5 million shares, not huge, for a 4 cent stock, but something's going on. I think it's some fat fingers there, as in somebody's typed in the wrong number, and we may find that some of those trades get reversed on that basis. But the company did respond to the query, and they said that all's above board. We did release something on Friday, which is just a regular, we're looking for we're kicking over some rocks in the desert somewhere. But, interesting. Yeah, I'm going to go aberration. I've seen lots of stuff happen like that, and they tend to be somebody's pressed the wrong button. But we'll see. If either way, you can't buy that candle, can you, because of the long upper shadow. So the system does handle that. This is Andrew saying at $1.50, I said CXO was dead. He was listening at the time. Okay. Well, there you go, Andrew. You've gone full circle with me, and I appreciate it. I appreciate you hanging around long enough to see that, and I wish more people in this lithium debate could see what we do here on Monday nights and understand what the hell it is I'm actually about for free, giving my time for free with joy, and I love doing it, don't get me wrong, but I think everybody on Twitter X thinks you're out there trying to pump your own book, or you're doing it for some ulterior selfish motive, and that could not be further from the case with me. The next person I don't know. But, I appreciate when people support me on X against those other people. So continue to do that, because I really do appreciate it. And my only goal on that platform is to try and show people there's a different way, because I have made all those mistakes, and I was the master of making those mistakes. But there's something, so eventually you do the George Costanza, and you understand that if all of your instincts are wrong, then the opposite of those instincts must be right. Let's go to Peter. Peter's got ALK, which happy to hold on to. And, this is a chart that if you go to... I'm 48 now, right? So if we go to 28-year-old Carl, and certainly 18-year-old Carl, he would have really struggled to buy this stock, because he would have said, man, I've missed that. I can't buy it now, right? But... You learn so many times by coming back and looking at these stocks in 6 weeks' time, going, shit, I should have bought that then. That your brain starts to go, well, maybe I will buy it. And then if it works, you keep doing it. That's like anything in life. If it works, keep doing it. If it doesn't work, stop doing it. And think about maybe doing the opposite. Happy with that one. Full risk position. I won't write it on the screen. It's already there. CEL, which is that one, still looking fine. I'm going to hurry up here because we're a bit behind time. We haven't even done US stocks. No objections there. FRP, not adding a third. Obviously need the right candle. MM8 looks very good. Today's candle is not enough to add risk on it, but certainly we are full risk position and looking for any subsequent demand side candle to add risk on it. QRE is the resources ETF. We've obviously talked about the resources sector at the start. Yeah, I think there's something there. You would gravitate towards this ETF on the basis that you couldn't find the best stocks in the sector. And I think for us, that's kind of a self-defeating proposition, is it not? Where we go, oh, I'll just buy the ETF, because it's our job as technical analysts, and hopefully we agree we're all now technical analysts with half a clue, that we can find the stocks within that sector and beat that sector. Maybe we can, maybe we can't, but that's our job, right? So I'm probably going to be inclined to say, well, there's 200, 300 stocks in that sector. Surely there are going to be stocks that aren't doing so well, dragging this chart down, and there's going to be a bunch of stocks that are dragging it up. Let's find those stocks. But if you're after the ETF, then it's a yes for me on the basis that it looks fine. WBT we have talked about as well. A magnificent last candle, and cannot fault it. I think FFS might be an acronym there with Michael, and not a request for a ticker code. I agree. Let's go to Rupam. I can't do US stocks tonight, Rupam. I'm sorry. I will take those under advisement for next week. Michael correcting himself and saying FFM, not FFS. But if you want to go like Weebit ... FFS, like, did you see how it moved? I agree with that. FFM is looking half decent, FFS. So, yeah, I could definitely go full risk position on that. I could actually add some risk to this one. It's not terrible. Just go through that copper sector and see if that's the best one you can do, though. But in isolation. Yes, that's yes from me. FEX has also been doing the things we want it to do. I've run it a few times over the last couple of weeks, and a nice candle today. So happy with that also. It's a bit of an oddball company. I did cover it a couple of years ago, and something about, it's got a finite resource, and once it runs out, that's it. But, and very high quality resource, and cash flow positive, and NPV was good, and all those things, but just couldn't see the future in it. But those are fundamentals. The chart is FRP plus 1/3. Hey, why do I say these things? I don't know. I shouldn't have said it, but I'm sure everybody's taken that into account. RNU, is it the only, quote unquote critical mineral stock that hasn't moved yet? Maybe, but it hasn't moved, has it? So let's let it move. Happy to have it on the radar. I still think we want to see it do something like this. Watch out for this level here. I'm happy to give this a little bit of room, okay? Because let's face it, it is a bit of a dog, right? And by a bit of a dog, I mean it's a serious dog, right, with fleas. And I know we'll use a lot of animals today. The leopard doesn't change its spots, but neither does this dog. And let's just see it come in with some decent volume here and some decent price action, and not this crap, which is 98% black candles. How do you get 98%? How do you actually kind of half go up with 98% black candles? That just smacks of distribution. That smacks of insiders who have a cost base of zero that really don't give a crap what the price is. They just want to get out every day. And that's a little bit concerning in itself. So I think we're a little bit of a ways away from that one. An interesting Andre and Wayne consecutively picking that up. Or maybe Wayne responding to Andre, I don't know, but then I've contradicted Wayne. I did not get better. I got better, thanks to you. I appreciate that, Andrew. That's one of my favourite sayings. Don't get better, get better. All good. A good call, Andrew. Agree. Thanks, Carl. That's the bottom of the list. I've covered all of your requests for tonight. Apologies for the technical difficulties. I will rectify those for next week, or find a different broadcast software. Let us head back to the disclaimer very quickly for everybody in the recording, reminding you that the content of this presentation is not specific advice tailored for your financial situation, objective, or needs. You need to consult the financial professional for that, and not take any of the general information that I've presented to you here as gospel, or something that you should follow through on. Apart from that, obviously remember, you could lose money. Trading is risky. You will endure losses. This market will tank, and it will tank horrendously at some stage. And we're all going to lose some money when that occurs. And it's going to hurt. It's going to be frustrating. I know. But we cannot fear that happening, because it could be a month. It could be a year away. And we just got to do the right thing in the meantime. And that's really, for me, what trading's all about. Ultimately, it's you and not I who's responsible for everything you do. But, of course, it's been a pleasure chatting with you this evening. Apologies again for the technical difficulties. I'll catch up literally as we go. I'm going to write down all US requests and get to those as a matter of urgency next week. All the best for your trading and investing until we catch up again. Bye-bye for now.